Hello, this is Joe Pryor of the virtual real estate team in Oklahoma City. I want to talk to my investors out there because interest rates. Interest rates are a crucial factor in terms of your return on investment. Obviously, the lower, the better. Now, we went through an era where the market was not good in the United States after 2008, and so rates were kept artificially low. But in 2018, the one thing that we saw is the Federal Reserve getting a bit more aggressive in terms of taming possible inflation that was out there. Now, the good news is that the inflation to a great extent really didn't happen. We didn't see oil spike to $100 a barrel. We saw food costs in a lot of places go down. So a lot of different sectors of the economy, even with housing being a little bit more kind of taking a little bit of not a big dive, not a bubble bursting, but, we're back to a little bit of reduction in affordability. And so the Fed for 2019 kind of decided that maybe let's hold off for a while. We don't think that inflation is yet on the horizon. And so I'm not an economist, I'm not a member of the Fed, but I'm getting pretty bullish on the fact that our rates are going to be good. Now, at one time, the rates went up on a 30-year, 20% down investor mortgage to 5.875. Now, for us old guys, or old people, I should say, who saw rates double digits, high double digits at 17% at one time, 5.875 just sounds like nothing. But to the younger population that we're dealing with, it's a big change. And I think that affects people. But now what I'm seeing is those rates go down. So for instance, the 5.875 at a maximum right now with anybody is 5.5. I talked to a lender this weekend that says they can deliver 5% on it, 20% down. Now, the other message I will give to investors is that if you'll put 5% more down, if you'll put 25%, for instance, down on a mortgage on an investment property, if it's 5.5% at 20% down, it goes down to 4.875 right now at 25% down. That dramatically lowers your payment. And 25% is not that much more money. And also that 5% is just less risk because you put more money down. And so I would consider doing that. And if it's 5% for a 30-year mortgage, you can expect maybe 4.5% on 25% down. So it's an exciting thing that the Fed is now kind of sitting on its hands on interest rates. This is good news for investors. Nobody can know how long this is going to last, but it doesn't look like in the immediate future that a rise in interest rates are on the horizon. So I think this is a good thing, and it increases your cash flow. This is Joe Pryor of the virtual real estate team in Oklahoma City, where we deliver traditional real estate values at the speed of technology.